What's up, everyone? It's Eric from Option Edge, and tonight I want to go over a common pattern that's been happening in the market. And basically, here's the gist of it. I'm looking at the S&P SPY right now, 5-minute chart. What's happening is the last few days and some other times in the last couple of weeks during this sort of downtrend. What we're seeing is we'll get a little bit of a pump midday. And then so this is at 3:15 p.m. Right at around an hour or so before the market closes, we're seeing this some algorithmic sell program. The reason why I say algorithmic because it's just a really sudden, all of a sudden, just crash that you're seeing, and it just seems like unnatural. Okay, not something that so something unnatural. So what we're seeing is the last 45 minutes or so, a sharp sell off. And you can see this was today, right at this is also 3:15. We went up and then boom, gap down. This was the other day, right around 3:15. We technically the gap down started early on. It was a down day for the majority of the day, but we saw that same rapid downside movement happen there. So what I've been doing is, and we'll hop over to Robinhood, and I'll show you how I've been playing this. Okay, and you can see. This is today's chart. 3:15 hits. We're trading at around 450, 451, and then some sort of sell program hits, and before you know it, in 45 minutes, we're down. Almost $5 real quick. So the way I've been playing this is, so today was Monday. I've been just getting in and getting out. I don't like to buy straight up directional puts or directional calls without, usually I'm always buying some sort of spread. I'll sell a call or put above or below. And I like to be a net seller of options. But when you see this pattern happening, to me, I'm trying to take advantage of it. So today, I entered the trade right around four. It was stock was trading at 450. I just chose the next strike below that. So we're going from out of the money, in the money. We get a little that gamma action, and I bought this at around 250 or 255, and almost in less than an hour, this is up $100, almost up 50%, 40% gain real quick. So I want to show that. So that's basically all I'm doing. I've been using the strategy the last couple of days and been able to profit off it. But I've been doing one other thing. I've been combining this with one other thing. So I want to show you that other thing. All right. So this is the NYSE tick index. Okay. So I first learned about the tick in John Carter's book, Mastering the Trade. If you don't know John Carter, it runs Simpler Trading. I think last year the guy had a ridiculous year. He had a 1,200% gain on his account, which is already like multi-million-dollar account that he trades with. The guy has been been a successful trader for quite some time. And in his book, Mastering the Trade, one of the things he talks about is the ticks, which it's a sort of internal measure of the market. And these large, basically, institutions, this basically shows sort of what they're doing, buying and selling in the major indexes. And what he calls this in his book, and let's go back. I have an excerpt from his book. All right, if you're ready. All right, so this is his book here, Mastering the Trade. We'll start at large scale coordinated institutional buying and selling is the same. It is impossible for them to hide if you know where to look. The tick marks their trail through the bush, along with their steaming piles of dung. You'd have to read the before to understand why he's saying that. So as traders, all we have to do is follow along for the ride. So he just shows you how the sort of a chart right here of the tick, and he says in figure 911 we have a snapshot of the tick in the SPY from Friday. On this particular day, the first hours of the trading are quiet, market gaps up, blah blah blah. So then he talks about extreme moves in the tick. So he goes, the first extreme tick reading occurs 11:20 a.m. when the tick hits the 1,000 level. The first extreme tick reading of the day is a good one to fade. it's the first probe, and probes generally fail. In this case, the markets chop around for about 20 minutes and then promptly sell off. So basically, what he's saying is that you'll see an extreme reading of the tick at the 1,000 mark, and then from that extreme reading, you can fade it. And then he goes on later in the market, we get extreme downside move, and you can actually buy that. So the tick goes back into quiet mode, blah, blah, blah. Then later we get an extreme tick reading to the downside. At that point, even though the market has gapped down more than 15 ES points, it is still choppy. There isn't any real trend in place. There might seem like a scary tick reading to buy because the market is down so much, but in reality, it's the first real probe to the downside during the cash session. So it's worth a shot. After extreme tick reading, the market did indeed set up a nice rally. So fading the first extreme tick reading of the day is working nicely. So basically, he's just going into the tick, and I hope this isn't too boring for you. I'm trying to make sure this is valuable. So if we mark off the 1,000 mark, right about right there, and then we mark off down low, another 1,000 mark here. We want to look for ticks making those moves. And so if we go, this is the 5-minute chart. So we got a high reading right around 1505, and then sure enough, right at 1550, we go here, right at 1515 or 315, excuse me, we see that downside. So you can use the tick to sort of day trade. I don't like to day trade, but I just do this when there's an obvious algorithmic trading that's happening right at the end of the market. I'm trying to see the pattern and react to it. Usually I like to be a seller of options, but in this market, you have to adapt, okay, because it's been a crazy market. So when that happened, right around, we got our high tick reading right about 3:05 p.m., and then boom, ticks are heading down. I was watching the ticks after I purchased my put, and I was watching them hang below zero, which is sort of confirming, all right, market is heading down, and I'm going to let this thing ride. Now, if I purchase this put, and then I saw the ticks started heading up, that would alarm me, and I would just close out probably for a quick loss. And like I said, I'm literally just buying options for the last hour of the market and then selling them. And yeah, so that's what I've been doing. As always, this isn't financial advice; it's just an observation that I've seen over the last few days. So yeah. So if you're liking the stuff, please like and subscribe. Thank you. Peace.